Today we're talking about the 3 fundamentals to a mortgage loan qualification. Today we talk about loan qualifications and what lenders look at when you're getting a mortgage. There are 3 fundamentals to a mortgage loan qualification. The 3 fundamentals are credit, income, and equity. Credit's easy. That's your credit score and your credit history. Your payment history is also critical. If you've had late mortgage payments in the past, it will be difficult to get a mortgage. If you have derogatory public records like evictions or anything like that, that is a big negative as well. Typically right now, for a FHA mortgage, I've seen credit scores as low as 580. That's the very lowest with compensating factors. The second fundamental is your income. Lenders use what's called a debt-to-income ratio to see if you're able to make your mortgage payments every month. Your debt-to-income ratio is calculated by adding all your monthly payments together. You typically need a 43 to 46% debt-to-income ratio. Now these change depending on the loan products and new regulations that come in. The mortgage industry changes all the time, so this information can change, but between 43 and 46% is normal. So, for example, if your new mortgage is going to be $1,500 plus the taxes and the homeowner's insurance, and you have a $100 car note and $400 in credit card monthly payments, you would add all those together, which is $2,000. Now let's say you make $6,000 per month, then your debt to income ratio is 33%. And so a lower number is better. So 33% definitely qualifies for debt to income. Lenders typically use what's called your gross income. So that's before taxes and deductions. So that works in your favor too. It's not what you get at the end of the day. It's your gross or your top line number that you made. Lenders typically want to see a 2-year work history. And this is for W-2 employment. So if you're getting a regular paycheck and salary. Commissions are penalized. They don't usually count 100% of your commissions, and using commission income is a little bit more difficult to qualify, but not impossible. When you're self-employed, they're going to take your 2 years tax returns of your net income averaged together. So basically, if I'm self-employed and I claim on my taxes that I made $30,000 the first year and then $40,000 the second year, they're going to count my income as $35,000 a year annually. And when you're self-employed, they're using your net income after your write-offs. So a lot of times when you're self-employed, it makes it a little bit more difficult because a lot of times people won't show as much income as they actually make, or they use a lot of write-offs, which will hurt your buying power when you're talking to a lender. So if you are self-employed, keep that in mind when you're doing your taxes. Maybe take less write-offs in the 2 years that you're planning to buy a house. Debt to income is really critical. Lenders aren't going to lend you money if they calculate your debt to income and there's no way that you're able to make your mortgage payments. So basically anything under 43% debt to income, you should be good. The last fundamental is equity. Now when you're buying a new home, the way that they're factoring equity is based off of the appraised value of the home. So you can't borrow more than what the appraised value is typically. Secondly, different loan products have different down payment requirements, so you have to buy a certain amount of equity when you do buy the property. Now, if you're using a VA loan, you don't need any down payment, so you can borrow up to the total amount of the property. For an FHA loan, you only need to put 3.5% down, so you don't really need a huge down payment. Again, equity is important because a lender is not going to loan you more money than the home is worth. And those are the 3 fundamentals to a loan qualification for a mortgage. And there you have it. Those are the 3 fundamentals to a mortgage loan qualification. If you're solid in all 3 of these fundamentals, then you should be good to get pre-qualified. So I hope this information helps clear up some things. And if you do have questions, leave them in the comments. And if you found this information helpful, please hit like or share this video. Thanks, guys. Bye-bye.